Welcome to Black Box Beat, a weekly live show where we take a midweek market beat every Wednesday right after the market closes, presented by BlackBoxStocks. We will give you insight, perspective, trends, teachable moments, and news you can use to beat the market. Black Box Beat starts now.
Yo, what is going on, everybody? Good to see y'all. It's been a week since we had our last show. Glad that you all could join us today for this week's edition of Black Box Beat. I'm Kang.
I'm Maria.
And I'm Hills. All right. Well, what do we think?
It's been a long, I feel like it's been a long week. To be quite honest, I feel like I've been in an abusive relationship for at least the last 7 days or so. It's like we're up, we're down, we're up, we're down, can't breathe. And we didn't even get the weekend to rest, really, right? Because we had Fed headlines all weekend long. I was scared to sleep, waking up to God knows what. So it's been rough, but all in all, it's made for some decent trades.
I agree. It's volatility, and hey, like up or down. I don't know about y'all, but that is like all the options trader can ask for. So I love the volatility. I don't care if it's up, down. Let's go, as long as it ain't sideways.
Yeah, no, it's like both of you guys kind of hit on it pretty well there. It's like when you have so many binary data points and so much noise left, right, and sideways, volatility is going to kick in, and it's going to be very, very difficult to sit there and find the perfect entry and the perfect exit and the perfect everything, especially where the way some of these candles are flying. It's like you sit there and check a position, you're up nicely, you blink your eyes, you're like, wait, what happened? What's that candle? Where are we going and why are we doing this now? But it's like the flow, again, has been very, very good as far as guiding this out and telling the story and painting it out. So that I'm very, very thankful for at the end of the day.
Yeah, it's like in this environment, it's like all of a sudden calm waters, and then all of a sudden, boom, adult store candle out of nowhere. It's crazy.
Yeah, it really has been. Absolutely. Well, let's get into our very first segment, which is chat room chatter. What's the word on the street out there, guys? What do we have?
Well, at least the way I'm kind of looking at it right now, I think it kind of goes back to me. One of probably the most important thing that everybody should be talking about and looking at right now is what they call Fed credibility. We're hearing a lot, Fed credibility. We have to do this, we have to do that. I want to take a step back real quick and talk about and go back to 2018, coming off the heels of the big financial crash when they started doing QT. That quantitative tightening ran up until the end of the year, and everybody was like, wait, man, you're being a little bit aggressive with this. Took them a while to kind of stomach and digest it, and then they eased off, and we had a nice bump and run from there. So from that standpoint, you can look at the Fed being a little bit late or a little bit early, depending on how you want to look at it. But I think more importantly, jumping into the environment that we had now pre-COVID with a deflationary environment, and then flipping into them doing everything they could to save everybody's, life savings and life altogether. You have to hat tip them for that as far as stepping in to do that. However, they made a decision to stay a little bit too long. If we go back to 2021, and start looking at that Jackson Hole speech where he continued to say, we will be accommodative to the markets. And everybody's like, whoa, we need to cool out a little bit with all of this accommodation. Whoa, don't worry, guys, because inflation is transitory. I promise you it is transitory. All of those things never happen. All of those things are never real. And so we're sitting here right now staring down the barrel of a gun based on basically the Fed not doing the right thing literally for the last 5 years. That's the reality. I strongly suggest that everybody watch the documentary that came out on PBS last night. It basically highlights exactly what the Fed has been doing over the last several years and how they're literally tripping all over themselves. Real quick, because I don't have a lot of time on this, I want to give you an analogy.
You got two other people in this segment. Come on, man, let's go.
Well, then I can hold it. Then I can hold it back. I'll hold it back. You go ahead. But I will say this: the Fed has two jobs: price stability and maximum employment. They are utterly failing at both. When you have banks falling out, you are failing at the two jobs that you have. So everybody carrying water for the Fed, everybody saying, well, the Fed is this, you've been wrong for 5 years. Why are we listening to you? Why are you even there? By all means, carry on.
I mean, look, that's a lot to unpack there. I'll just say the Fed is doing exactly, in my opinion, the Fed is doing exactly what it's supposed to do. You know, no one, you can't see the future. I can't see the future. You know, it's made up of a group of people that can't see the future. So I think that they're kind of stumbling along and trying to do what they can at the, to basically stabilize the economy. So we know that they've been wrong. Um, when you raise rates this fast, something's going to break. It always does. Orange County blew up and filed bankruptcy in the late '90s, so it's going to happen.
So I think that's really in a hard spot, to be quite honest. That it's they're kind of caught between a rock and a hard place because ahead of this, coming out of COVID and all through COVID, we basically exhausted the Fed exhausted all resources, almost all resources they had to stabilize the economy. So now they're kind of in a spot like, okay, this is what our people want, and this is what we need to do. So I think they really are stuck, right between a rock and a hard place. And I'll tell you what, if you look at just sentiment readings and the fear and greed index, again, the last several days have definitely been a roller coaster. We've got the uncertainty of the Fed news, the fake news, the Fed stepping in. If you look at that though, we've actually dropped quite a bit down into the extreme fear level. Yesterday we popped up just slightly, and today we were back down as of this. Well, it was mid afternoon, back into extreme fear, right? And that's not necessarily a bad thing. So a lot of people see that like, oh my gosh, I can't trade this. Everyone's extremely fearful. Well, from a sentiment standpoint, this is actually a good thing. When you see things at an extreme, it's typically time to keep your eyes open to see if we have a reversal coming soon. Now, that's not to say we can't stay in extreme fear for an extended period of time. We can. But what that does mean is don't get so locked into being short and being in that fear mode that you're missing the opportunity when it does come.
I can't disagree with that. Just like the one of the greatest traders, investors ever, when people are scared, you buy something like that. The question is, at the end of the day, is where do you buy? He's sitting on a lot of cash right now, so he ain't buying yet. Maybe today you buy. Maybe tomorrow he'll buy. Not yet.
Yeah, I agree. Yeah, just make sure you see it in the charts because you don't want to be the first one to step out on that train track and get smacked. So for me, I'm kind of looking at where we are in the chart. So we're kind of hovering around this 200-day moving average. And Mario, like you were saying, what a week makes. It feels like forever since we last met. So much stuff has happened. And during that time, we've broken the 200-day moving average to the downside on SPX. We're now below that 39.40 area. We tried in the last couple of days to go up there, kind of get close and back off. And we found some support, it seems like, between, I've got a longer term area support down there at 38.08 and around like 38.50. We found support through here. So just kind of chopping around. And I'm personally looking forward to see when we kind of get some direction. But technically, we're below that 200-day moving average up there at 38.40, or 39.40, excuse me. So for me, it's just kind of keeping a cautious tone on any kind of moves up until we can get back over that. And so that's what I'm watching.
Yeah, I agree. I think everybody's kind of looking at the same thing. Yeah.
And same here. That same area, that 3800, 3850, definitely two areas I'm keeping an eye on. All the areas before that I was watching. I mean, when I say before, I mean last night. All those areas, we blew right through those. We basically gapped through those this morning. So those areas are done. Potential resistance going forward potentially, but right now I'm watching those same areas.
Yeah, y'all just, like I said, y'all just be careful out there. We're around some major areas, and don't be the first one to feel like you got to get in something. You can always sit there and kind of just scalp during the day, or you can be in cash overnight. You don't have to feel like you have to be in something, because some of these headlines it's kind of moving us on really quickly. So with that being said, folks, let's get right on into the next part of our show. Where is that money flowing? Where is that money flowing? And options traders, hopefully it is going into our accounts. But what are you guys seeing in the flow?
So specifically what I'm seeing is basically money kind of moving away for anything from the standpoint of discretionary income. from Six Flags to Disney to Nike to anything that ultimately that you don't need. Airlines, Wynn, LVS. You just pick something. If it's fun, money's moving out of it. Starbucks, money's moving out of it. That's the one thing that was been very apparent over the last couple of days is there is an assault right now from an option standpoint on anything that's fun. The fun police are there. We can thank Papa Powell for going ahead and screwing up yet again. We don't get to have any fun. Thank you, Papa Powell. We can go back to buying underwears at Walmart, which that trade is still holding on well.
Agreed. Money has been moving out for the most part. Actually, today we saw some money moving out of the industrials, which I thought was interesting. But still not really any clarity or conviction in flow yet. Very short term for the most part. However, yesterday we did see some buying into the Amazon December 2025 110 calls. It was over $2 million, and this is a trade that we followed. Just thought it was interesting for them to put that amount of money into Amazon out for 2 whole years. And those contracts weren't really badly priced, to be honest. I personally, again, would just like to see some more of this kind of flow. And maybe after next week, after Papa Powell gives us his speech and we find all that fun stuff out, maybe we'll have some kind of clarity after that point.
So we could have clarity after everything he said for the last 5 years has been wrong. Yeah, let's go ahead and wait and see what he has to say now. You're a rock star, Papa Powell. What you got next, buddy? Where are we going? So I can do the opposite of whatever you say. I'm borderlining on a complete meltdown when I hear people carrying water for Powell. Oh no, it's great. He's doing a great job. Come on. That's like a Cleveland Browns fan saying, you know what? Everything's great. We're going to win the Super Bowl this year. Yeah. No. Sorry.
They might, Hellsbells. You never know.
History says they're not.
They might.
You know, and the way I look at it too, like I said, none of us, we have a crystal ball. So, you know, I think that if we should step into if you can do a better job, try it out, man.
It's his job. Why are you carrying water?
Nobody can see the future.
I don't get it.
Nobody can see the future. No two.
Well, we're coming into my favorite part of the show, which is Shag, Marry, Kill. And we're going to try to lay out some of these rules ahead of time so we have an idea of what they are. A shag means that this is a short-term scalp up or down, less than 1 month. A marry means that we plan to be in that position for a minimum of a month. And a kill means we are exiting that position or not touching. And I will go ahead and get that kicked off with JP Morgan. And I know you guys are probably going to kill me, right? This is a bank. Why do we want to even go near this at this point? That's disgusting. That's horrible, right? However, we did have on Friday, again, keep in mind, Thursday afternoon is when we had the SIVB news, the Silicon Valley Bank news. That's the afternoon it came out. Friday afternoon into lows almost. Well, I shouldn't say into lows, but towards lows. We had a large bullish flow alert into this week, surprisingly, 136 calls. It was a little over $1 million in premium. And it was one of the few big banks or banks in general that we actually saw some bullish flow on. So this is, right in the center of really bad news where people were pretty much freaking out to say it very plainly. Look at the trade though. They are still very cautiously not buying time. However, if you look at the open interest, I would have expected to see, especially with the remainder of the news that we've seen, that OI would have dried up. You'll see that big volume bar that came in on the 10th. And they, not only are they still they're in the majority of the position, they actually added to it yesterday. So it'll be interesting to see what that is. Again, still cautiously, they're not buying a lot of time, but something to shag for now. Shag long.
Yeah, it's like I can't honestly, Mari, I can't disagree with the standpoint of the overall bounce. However, there does appear to be overall contagion within the system. You had Wells Fargo doing a shelf offering last night, which you don't do that unless you're kind of in trouble just a little bit. Things aren't as great as you might think. We had another bank fail, so that makes 3 in the last week as far as banks falling off a cliff. Basically, at the end of the day, this is what in a space that I'm going to look to kill, not necessarily short, but just stay the hell away from, is kind of the way I'm looking at it.
So for me, Mario, I'm with you, and I kind of see both sides of this. But I think you can also kind of separate the regionals out from the major, money center banks. So we saw that after all of this turmoil, that actually like one of the major money center banks had like $15 billion in deposits. So you know we know that some of these bigger institutions can weather it. So I'm going to go with you. I'm going to shag it. I think that technically it looks kind of oversold here. So I'm going to shag it just for a short term bounce.
Very, very short term. Yep.
hmm for me this week, I'm looking at Nvidia. I actually put on a trade on this one out to the room. Now, Nvidia, the only thing I'm a little bit concerned with here is their everything AI now seems to be, like in vogue, and they have a big part of that. So that's kind of the danger here, and what could be keeping this thing, elevated. I like this rising wedge right here on the 4 hour. I went out a couple of weeks, went out to the 31st, so I bought some time. I like the fact that it broke this rising wedge to the downside, bounced off of a major area of support that I had, went right back up to resistance, and has kind of right now having a little bit of issue kind of getting on through. So for me, this is a shag short. Like I said, I put this on today. I'll be watching this, and if it gets over, say about 245, 246, then I'll look to get out of the position.
Oh, I want to say I'm going to kill it, but because I'm still mad at it, but I'm going to shag Nvidia. I do think that it's sticky between where it's at now and up to 250. Nvidia, you guys know I have a love-hate relationship with Nvidia. I love trading it, and it loves to give me a hard time, which is great. But again, between here and about 250-ish, I think it's a little bit sticky. So right now, it's a very quick shag for me.
Yeah, I think it's look. Nvidia is one of those long-term companies that you just buy and just kind of hold in. The level in the environment, it's interesting. The only thing that is like, look, technically, Kang, I love the trade. I do really, really love the trade. Narrative wise, with all the money that's moving into that sector, government assistance, if you will, a little bit of welfare because they're looking at that sector as being a national security issue. I think it's one of those things that for me personally, I want to stay away from more than anything. I'll watch and maybe scalp intraday, but it's difficult for me to put it. Technically, love the trade, man. Love it. Love it.
Thank you.
Narrative wise, it becomes very difficult for me to get my head around it, knowing money's pumping into that sector at the degree that it is. All right, let's get into mine. So obviously, I don't know if you can tell my overall tone and looking at everything right now, because the Fed has lost all credibility in every way, shape, and form. They most likely are going to look to pivot after they said that they wouldn't pivot and couldn't pivot and didn't know what a pivot was. I'm looking to get short SPY for a number of reasons. I put a trade on today, put it on the 384 puts on SPY out to March 28th. That puts me through FOMC next week. That puts me through a couple of other data points. So I'm going to be sitting short on that. This is not necessarily a kill by definition, but until the Fed is able to actually have a shred of credibility in some way, shape, or form and starts destroying literally everything in its path, I find it difficult to not get short the market overall. Flow in industrials is poor. Flow into the fund police stocks, poor. All of those things lead me to believe that most likely, give or take, we get a little bit of a spill.
So I hope you like this, man. I got this in honor of you. This little crabby hat, man. You a little crabby today. So I got a
What is
crabby hat for you. Yeah, it's a little, it's a little crabby hat. Got the little claws on it and
You
everything,
know what, man? That's
Yeah,
kind of looking. It's like
a little
if
crabby
you
hat.
change
Because
it just a
you're a little
little bit,
crabby
you
on the
look like an
thread.
Ewok. Like
You're a little
honestly, you
crabby
would
on
have
the
the whole
thread, man.
Ewok thing going on. If you just change just a little bit, just a little alteration, you have the Ewok locked
I'm
in.
just saying,
That's
man.
right.
one
That's
too?
nice.
I would like a Krabby Hat pants as well.
Yeah,
Krabby
I'm just saying,
Hat.
little
We can all
crabby. So
have.
yeah, yeah, for sure.
All right. So I believe I could be wrong, but we do have a member question. This member question from Flow Watcher. Why are options contracts so expensive this week compared to weeks prior? All right, I'll take this off the bat. We do have either triple or quad, or we have a bunch of witches in town. So that is a big piece of why it is, why they're a little bit more expensive. Also, when you have CPI and critical, pivotal data like that, these things get priced in pretty heavily as far as having large moves. So that's why your option premiums are going to be more expensive. To avoid this type of activity, make sure you're checking your calendar to where you understand what's going on the week of the options that you're buying. If you're buying OPEX, things are going to be a little bit more expensive. You're buying CPI, things are going to be more expensive. Same with next week with FOMC. They're going to be a little bit more expensive.
Yeah, and I'm with you too. Yeah, just a lot of stuff is going on right now. We have a lot of turmoil in the markets. In regular times, ERs, something like a binary event on the horizon would cause IV to kind of go through the roof, and then your options contracts will be really expensive. Right now, like tomorrow, we've got the ECB interest rate decision in pre-market. Everybody and their mom is going to be looking to see what happens with Powell next week. So we just have a lot of stuff on the horizon. And when that uncertainty goes up, then your IV is going to be, elevated. And in turn, that's a key component of how these options are priced. So highly suggest, if you're not necessarily familiar with that, just kind of read up on it, because in these types of times of uncertainty, things are going to be a little bit more expensive.
Just like these guys said, they're absolutely right. When you're buying expiration for during weeks where there are binary events, macroeconomic events going on, IV is going to be elevated. It's going to drive the price of those contracts up. So that is why, literally why.
Yeah, I think we all nailed it, right? We have some more time on the clock. Is there anything y'all would like to discuss? Anything? No?
I think it was enough.
Get right on into the bad beat. What happened with this bad beat?
Are you sure? All right. Bad beat. Okay, so bad beat, we kind of established, I guess, a couple of shows ago what that was. This is going to be a little bit interesting because there's going to be a story kind of locked into this a little bit. Sometimes when you're right, you're still wrong. Okay, think about that. Sometimes when you're right, you're still wrong. If we go and we look at the bank action from the Silicon Valley Bank to the Bank of New York, and then pivoting back into what's kind of going on with Credit Suisse right now, and maybe there's a couple of others out there. We saw some really interesting flow. There's a lesson to be learned in all of this. If you don't, you swim with sharks, you might get ripped out. And ultimately, with some of these tickers and looking at, if you're a shareholder, you're like, wow, everybody's saying I got a great bank. Everybody's a buy recommendation. Everybody's like that. Spill down, dead. Another chart, dead. Another chart, dead. We can keep on pointing at these. These charts are basically indicating, and ultimately what happened is these were taken off of the market. These no longer exist. So if you were long, you got no money. You were short, you got no money if you didn't close out your position. No matter what, you got no money. So when you're dealing with a ticker that is in this realm of being, on the borderline of death, and you don't get out, you have the ability to lose all of your money, even though you were dead set right on, 100% correct, as far as how that ticker would go and move. You get nada. That's a bad beat.
But I would say, though, the good thing in this is, who in the hell knew about Silicon Valley Bank prior to last week? Because I know I didn't. I didn't know anything about it. So I saw where like somebody had made like hella money shorting it, maybe a limited number of people. I didn't even know. So I consider the name notoriety or lack thereof like a benefit, because I didn't even know.
They've been around for 40 years and are seed funders for some of the top tech and innovation on the planet. It's like, if for you not to know, I can't explain that.
Man, a whole bunch of people didn't know who they were. It ain't just me. A whole bunch of people. I'm gonna have to sit on my crap.
They're not a fly-by-night organization. It's like, that's crazy.
You didn't hear me say that. I said that nobody, and a lot of people didn't even know who they were. So maybe you did, but a lot of people didn't.
I will tell you one thing though. Look at those. If we can run those charts back, especially in the SIVB, the Silicon Valley, and the Signature Bank in New York. I don't know if we can, but if you look at those, what you're looking at right here is a 5-year chart. That is not a bank chart. That looks like a tech company chart.
Mm-hmm.
What kind of bank has run up like that, right? That's number one. Now, what I will say is that I'm glad that depositors did get their money taken care of and whatever. It really sucks that shareholders kind of got screwed. They got the short end of the stick. And unfortunately, that is the risk that we take as traders or investors, right? That can happen to any of us at any point in time if you have any skin in the game. And this is why, we continuously drill risk management into our members day after day after day. We're constantly talking about risk management specifically for these kind of situations, right? You don't want to be caught without any dry powder. If you've got everything wrapped up in one thing and you have nothing left, and that one thing happens to be an SIVB or an SBMI, you're screwed, right?
Mm-hmm. Mm-hmm.
Yeah. Yeah. I wish we had more time.
So, the next one, we got this weekly renter wrap up where we talk about trades that were good for the last week. So, on last week's broadcast, mine was Apple. So I recommend Apple a short. To me, it was approaching an area of resistance, and to me, it looked like we had better risk reward to the downside. Also, just some things on the horizon did not look good to me technically. So this was one where on the last broadcast recommended to take it short. Put out the trade. These were 150 puts. I got in actually at 166 earlier in that day. Put it out live in the community. And got out just a little bit after that at 2 and 355. So here's actually where the exit points like on that trade. So that was about a 20%. And on the last, I cut the majority of it at 20%, and the last of it was at 113%. So hopefully y'all made some nice cash on that one.
That's a beautiful trade there, Kang. Very, very nice. You guys know I love Apple, whether we play it up or down. I feel like it's a great one to give you nice, easy, I don't want to say easy, but nice, quick moves for the most part. That was beautifully done. Very beautifully done.
Yeah, King, really, really great work. Great trade.
Hey, thank you, sir. Thank you, sir. Thank you, sir. So you stick with us, make some cash, folks. Stick with us, make some cash. So that brings us to the end of our show, folks. We hope that you had a good time here with us. I know we did. And I hope to see you again next week. So that wraps up this week's edition of Black Box Beat, where we give you the word on the street. And stay green, everybody. We'll see you guys next time.